Hello everyone, welcome to another episode of Revernos. In today's video, we'll be talking about artificial intelligence and the impact it's had on the financial sector. So let's dive right in. We'll start by reviewing some articles and then we'll talk about how artificial intelligence will continue to impact the future of the financial industry. We'll start with this article from Forbes that talks about the democratization of financial services and how artificial intelligence is facilitating that. This Forbes article is based off of an interview Forbes did with Sparos Margalis, who is a venture capitalist and founder of Margaris Ventures. He also successfully advised two tech companies, WeFox and SDC Pay, who have both become unicorns with valuations over $1 billion. They ask him is about the issues and shortcomings that he sees in the traditional banking sector and how financial transformation, especially using artificial intelligence, can be used to sort of address those issues. And he talks about how there's a lot of unbanked people in the world, people with disabilities, minorities, or other marginalized groups that don't have access to the traditional banking sector who could greatly benefit from being able to have access to these financial products. And so what we'll do now is look at how many people actually don't have access to the traditional banking sector. And we see that 1.7 billion people on Earth right now don't have access to bank accounts. And we can look at that and see the top countries with the number of people that don't have access to the banking sector. And we can see China has 224 million people without bank accounts. India follows with 191 million. And then we see Pakistan, Indonesia, Nigeria, Mexico, Bangladesh, Vietnam, Brazil, and the Philippines, ranging from 46 million in the Philippines all the way up to 224 million people in China without bank accounts. So unbanked people is a large issue, and expanding access to the financial sector can definitely address this issue. Not having access to a bank account can cause you a lot of problems in your financial life, and I'll just briefly talk about two of those. One is you may not be able to receive a loan such as a mortgage or any other personal loan if you don't have a bank account. And another issue is if you receive a check, if you have a bank account, you can cash it, but if you don't have a bank account, even if you can still get access to that money, it usually comes with paying a hefty fee in order to be able to cash it without a bank account. Artificial intelligence can expand access to the banking sector because let's say you have a bank with 100 employees, those employees can only serve a certain number of customers, and that can be a bottleneck for the number of people you can reach. But if you have an artificial intelligence system, more people will be able to interact with that system because it won't be constrained by the number of people and how many people they can help. It would only be constrained by the number of servers and the bandwidth you have, which can rapidly be expanded, especially if you're using cloud computing or have the ability to rapidly scale your server space. Is the kind of work that AI is currently doing in the financial space. And the big three examples he brings up are lending, fraud detection, and chatbots. So let's say you're a bank, you make money by lending money to people and then they pay it back with interest. But if they can't afford to pay you back and they default on their loans, then the bank can lose money there. So with artificial intelligence, they're using these machine learning algorithms to be able to predict the probability of someone defaulting on their loans to being able to make more informed decisions about who to loan to or who not to loan to. Artificial intelligence is also largely being used in fraud detection, so it's a predictive algorithm that can predict the probability of a transaction being fraudulent, and then the bank will be able to take corrective action if they can predict that something is fraudulent or allow it to go through if it's not fraudulent. The last thing he mentioned was the use of chatbots. Chatbots are conversational artificial intelligence that can actually replace people because instead of having to interface with the person, you can talk to this chatbot instead. And you can ask these chatbots questions and they'll give you a response and they'll just keep improving until there may be a point where you won't even be able to tell if you're interacting with a human or a chatbot. ChatGPT has gotten very popular in the past few months because it's an extremely good chatbot, and we actually have a video on our channel describing what that is and even talking to it and seeing how good its responses are, so make sure you check out that video. Implications of dealing with chatbots in a financial context is it can bring up the opportunity for personalized banking. So oftentimes when you go to a bank, you would have to talk to a representative. And what a chatbot can essentially do is be your own personal representative, so to speak. And you can just interface with this chatbot, you can ask it questions, and they'll be able to give you personalized and tailored responses based on your unique characteristics. These personalized banking applications can help you track your income and your expenses and can help you come up with a tailored plan to help you manage your finances and can even give you reminders on when you need to pay your bills and help you take better care of your personal finances. We already briefly touched on risk management and how a bank can use an algorithm in order to determine who is worthy to lend to. But when an artificial intelligence system does something, it can also be used to reduce errors. And so if you have a human doing a certain job a certain number of times, of course, some percentage of what they do will contain errors. But if you can automate that with the system, then the system won't make those same human errors. Quantitative trading is essentially the use of algorithms to automate your trading. And so as opposed to having a very large team of analysts making investment decisions, you will have an artificial intelligence system that works in conjunction with perhaps a handful of analysts, which greatly reduces the number of people you need to work. And when you can do this, you can cut fees for your customers. So instead of having to pay, let's say, 10% of profits or something, you may be able to cut that to a smaller number because you have fewer analysts working because you have this AI system. This can also help you to make faster trades, and the AI system will be able to identify opportunities that a human might miss. And so when you have humans and AI working together, that can give you a better investment outcome. Thanks for watching. Make sure you like, comment, and subscribe. Subscribe and click the notification bell so you don't miss an upload. Also, we have a lot of great content on our channel, and we have a lot of great content coming in the future about Python programming, data analytics, machine learning, physical computing using Raspberry Pis, and cloud computing and Amazon Web Services. So make sure you subscribe so you can view all of those videos coming in the future and support the channel. Thanks for watching, and see you in the next video.